Chris Brower here with Brower Real Estate Group, part of KW Success. We've got another market update for you today, and today we're going to be talking about mortgage rates. They've been at historic lows, but they're climbing. And so we want to go over what it's going to cost you if you wait to buy your dream home. Stay tuned. Today's housing market has been one for the record books. We've seen outrageous increases in prices on homes, as well as we've seen all-time lows for mortgage rates. Those seem to have bottomed out in January of last year, so if you're somebody who feels like you've missed that golden window of opportunity to get a home, it's not closed just yet. Today's mortgage rates are still worth taking advantage of. If you look at historic mortgage rates, we are still crazy low. Most of our buyers are still closing homes right around that 3% range. You know, this last 12 months, we had some buyers that were really lucky and got down in the 2s. That being said, 3% isn't that bad. However, it is climbing. If you look at what everybody's projecting rates to do next year, they're just gonna start inching their way up and up and up and up. So we've got to make sure that you capitalize on it now, because that window of opportunity is closing. And what's really gonna suck is if you look back and say, oh man, I had the opportunity to buy a house then and I didn't do it, I should have. You're gonna be kicking yourself, because that monthly interest is going to hurt you in the long run if you wait for rates to rise. If we look at mortgage rate projections, looking here, we've got Freddie Mac, Fannie Mae, the MBA, and the National Association of Realtors, who have all given their projections for what interest rates are going to do next year. If we look at the average of all four, we see here by the end of Q1 in 2022, rates up to 3.32%, Q2, 3.45%, and by the end of Q3 next year, 3.55%. It's going to be 0.5% higher than what you can get right now. Like I said, that is going to affect you big time. Looking at my notes here, I did a little calculation. If you're able to lock in at today's rate of 3% on a $350,000 home, your monthly payment's going to be right around $1,474 a month. However, if you're not able to buy until the end of the third quarter next year, when rates are up to that 3.5% mark, like the projections are saying, your monthly payment on that same $350,000 is going to be $1,581. $1,581. That's a difference of $107 more a month. And that might have some of you thinking, well, that's not that bad. I'm not that worried about it. Well, what we failed to mention is that a home that's $350,000 today is not going to be $350,000 at the end of Q3. We expect prices to increase as well. So you're going to get a less nice home and you're going to pay more money for it if you sit back and wait. The other thing to consider is that $107 a month, while it may not feel like much every single month you're paying it, you've got to think about that over the life of the loan. I mean, if you're doing a 30-year loan, an extra $105 a month is huge. You're talking over $37,000 that's going to cost you just in interest. Don't make that mistake. If you want to get into a new home, now is the time to do it. Give us a call, send us a text, shoot us an email, whatever's easiest for you, and we'd be happy to help you get the process today. As always, like and subscribe our page. We're going to be putting out consistent content to help you when it comes to the home buying and the home selling process. Thanks.